Hello, this is the Canadian Revenue Agency. How may I help you?
Hi, I'm calling to speak with someone about paying taxes on Forex. I heard you don't have to pay anything. It's a great day to be alive.
Sir, if you make money, we'll find a way to take it.
Even on Forex, with FTMO and funding talent? I don't think you understand. I passed a bunch of challenges. I'm kind of a big shot.
Sir.
A guy on Telegram told me I didn't have to.
Sir, you're nuts. If you make money on all self-employed income, you'll be taxed based on your tax bracket. And if it's under a corporation, you'll be charged corporate tax and then any income tax on the sum that you pay yourself. Sir, how long have you not been paying your taxes?
This is awkward. Hi guys, welcome back to another video. If you're new here, my name is Matt L. And I'm a full-time Forex trader living in Montreal, and I'm also studying naturopathy on the side. I hope you guys enjoyed that little skit, and unfortunately there's a little bit of truth to it. I've seen too many people online saying to other people that you don't need to pay taxes when it comes to FTMO and trading. And this just 100% is not the case at all. You 100% do need to pay taxes unless you have some kind of offshore account in the Seychelles or the Caymans. You may not have to pay corporate tax or company tax, but once you pay yourself, assuming you're living in some kind of Western country, you're going to need to pay taxes on anything that you earn. I've had a lot of requests to make a video on FTMO and taxes. Now, I want to emphasize that this video applies to all trading companies, funding talent, traders capital, 5%ers, all of those, this will still apply. And it's very possible that after this video, I'll need to make additional videos on taxes because it's such a large topic and you guys may have additional questions. But for today, I want to focus specifically on how you can structure your trading to pay the least amount of taxes as possible. Now, I'm living up in the Great White North in Canada, so everything I say will apply specifically to Canada, but it will also give you a good framework if you're living somewhere other than Canada. I know there's a lot of similarities in the tax code and the tax regulations between Canada and the UK, and this will also give a good framework for all of my friends down in the States. So with all of that being said, let's get right into it. What's important to remember about FTMO and all of these other funding companies is that you don't actually have access to their live capital. You're given a demo account which is supposedly matching their live funded accounts. Now, whether or not this actually is done isn't really that important, but what is important is that at the end of every month, if you're profitable, you're going to be invoicing them. This invoicing is really a key factor to consider because to the taxman, this makes you no different than anybody who's providing any type of service, whether it's cleaning or car washing or really any type of service, you're seen as no different. You're basically a freelancer in this case. And so that is something that needs to be kept in mind. So when it comes to structuring your trading to try and limit your taxes, there's kind of two things that you can do. You can either remain under your own name, and you very well may need to just register a company under your own name, which is very inexpensive and very easy to do, or you can open up a corporation, a limited liability company. And there's a lot of pros and cons to both of those. So today I'm going to be breaking down some of the pros for why you shouldn't open a corporation and just remain under your own name, and pros to why it might be beneficial to open up a corporation to save on taxes. So let's get right into it. So starting off, a few things that are really important to consider is whether or not you're going to be trading full-time, or if you're going to have a job on the side or have a full-time job and then have your trading income be a little bit of side income. This is something that's important to keep in mind because it may make the difference between it being beneficial to open up a corporation and it not being. On top of that, it's a really tricky thing to do, but creating a rough estimate and having a rough idea as to how much money you're going to make from trading is also really important. And then after that, there's also a cost analysis that needs to be done. Here in Canada, if you use a lawyer to incorporate a business, it costs roughly $1,000. And then on top of that, you're going to need to pay an accountant accountant to do your year-end closing, and then any additional bookkeeping that you may want to outsource to an accountant. So this is something that's really important to keep in mind. When I was first considering whether to put my trading under a corporation, I really had to run a lot of numbers to see at what point it became beneficial to open a corporation. For me, that was around $50,000. Once I made around $50,000 of trading income, it started to become beneficial tax saving wise to have my trading under a corporation. And I'm gonna break down why that is. So there's a lot of things to go over, so I'll take it slow, one piece at a time, and do your best to just stay with me. So a quick overview of corporations. What's really great about corporations is a couple of things. Number one, it creates a separate legal entity, so it offsets any liability that you may have. Now, this isn't exactly super beneficial when it comes to trading, because since we're not even trading our own capital, we're not really that liable. But if you were to have, say, a construction company where a lot of things could go wrong and you could be liable to lawsuits, this becomes really important. If somebody were to come after you and sue you, they can't come after your personal assets, and they can only come after the assets of the corporation. So that's something to keep in mind, but not a huge thing for trading. The second thing is that it allows you to postpone and offset any taxes that you may pay. The reason for this is that if you receive personal income tax, you're going to be taxed on it at the end of the year, regardless of how much you make. However, if you're making more money than you need to pay yourself, you can leave that money in the corporation and pay yourself at a later date. Now, you'll still have to pay the corporate tax on this revenue. In Canada, that's about 18%, and it varies depending on what country you're from. So you'll have to pay that 18%, but if you don't pay yourself that money, you can just leave it in the corporation. You can invest it in stocks or real estate or put that money back into the business, but you won't have to pay personal income tax on it. So that brings us back to when I mentioned whether or not you're going to have a full-time job and trading on the side, or if you're just going to be trading full-time. If you already have a salary and you're not going to immediately need all of the money that you're generating from FTMO and your trading, and you just want to create a nice little nest egg, maybe invest it on the side, then a corporation could really be solid for you, because you can live off of the money that you're earning from your full-time job, and then you can grow this little nest egg and you only have to pay corporate tax on it. However, if you're trading full-time and you don't have a regular kind of 9 to 5 and you need all of that income to pay your bills, then it's possible that a corporation isn't exactly the way to go. You'll be paying that 18% corporation tax, and then you'll have to pay income tax on top of it. So you might be better off just putting your trading under your own name, paying income tax on it at the end of the year, and just not having to pay that corporate tax. A third kind of situation that may make it beneficial to open a corporation is if your living expenses are really low. Now, this is the category that I fell under. I don't have a typical 9 to 5. I'm trading full-time, but my living expenses are quite low. I don't have a car, I'm renting my apartment, and if you ask my girlfriend, I'm pretty cheap. So for me, it's much more beneficial to put my trading under a corporation, pay that 18% income tax, and then leave the majority of my trading profits in that account, invest them, grow them how I see fit, and then only pay myself when I need to. And so for me, that's why I decided to open up a corporation to put my trading under. And one more benefit when it comes to incorporation is that it will allow you to write off business expenses. Now, if you don't create a corporation, you can still write off business expenses, but it works a little bit differently. When it comes to corporations, it's just the classic write-off.
It's a write-off for them.
How is it a write-off?
They just write it off.
Write it off what?
Jerry, all these big companies, they write off everything.
Which is really a nice benefit. When it comes to trading, there might not be a ton of expenses, but there are some things that could come up that you need to purchase that you can write off, such as if you need to buy a new computer or any desk kind of accessories, or your Wi-Fi, your phone bill, a few things like this that you'll be able to write off, which is really a nice thing to be able to do. So if you do have a fair bit of expenses that are related to trading, subscriptions as well as another thing, then that's something to keep in mind. You'll be able to write those off at the end of the year. So that is really something that's nice about incorporating, and it's one of the reasons why I wanted to incorporate my business as well. Now, a couple of reasons for keeping your trading under your own name. It's really hard with trading to predict how much money you're going to make, but if you don't expect to be making a ton of money, then it's probably better off to wait to open a corporation, and maybe consider that in the future. If you don't expect to make a ton of money, it's not worth it to pay in corporation fees, accounting fees, logistical fees, and all of those headaches. You're better off just putting that energy into your trading and paying your personal income tax. Now, if you do expect to make a lot of money, another thing to consider about incorporations is what tax bracket you're going to fall under. Again, this is different for every country, but you can easily go online and find this information. Like I said, my living expenses are really low. So the first tax bracket in Canada is around $48,000 and below. So when I make more money than that, I'll just be leaving that inside the corporation, and I'll just be paying myself a smaller amount of money just to pay for my living expenses. It really comes down to whether it's cost effective or not, and this is going to be different for everybody. So you need to take into consideration how much you think you'll make, whether you have a job or not, whether you'll be paying yourself the money that you'll actually be generating from your trading. There's so many things to consider, and I really wish that I could give you guys a more straightforward answer as to whether or not you should just keep your trading under your own name or to open a corporation. But I will say that I see a lot of traders focusing on taxes long before they're making a significant amount of money. It was only after I got my first significant FTMO withdrawal that I started to really look into whether or not it would be beneficial to incorporate a business. So I do think that it gets a little bit too much focus. I would just put most of my energy towards improving your trading, passing those FTMO challenges, and then once you are making a significant amount of money, then it's something to concern yourself with. It's a really good problem to have if you are trying to figure out taxes. It's a good problem to have, so don't feel bad about that. So to give a quick overview, some of the reasons for why it's beneficial to put your trading under a corporation is that it offsets your liability. If your living expenses are really low, or you don't need the money that you're going to be generating from trading, it can offset your taxes to a later date, and you can write off any business expenses as well. Now, some reasons to keep your trading under your own name is that you save on incorporation and accounting fees. You may still have to pay an accountant at the end of the year if you are generating income, but you will save on the incorporation fee. You won't have to open up a separate bank account, which can sometimes be a headache, especially as Forex trading is still slowly developing and becoming a more common theme. If you're going to need to pay yourself immediately all of the money that you're generating from trading, then you're most likely better off to just keep it under your own name and not have to pay that roughly 18% corporate tax. And lastly, if you're not making a lot of money, then there's no point in wasting $1,000 to create a corporation. And that is it, guys, when it comes to whether or not you should put your trading under a corporation or not. Like I said, it's really a case-by-case specific situation. I wish I could give you a more straightforward answer, but this is a nice guideline for you guys to work off of. I really wish that I had a video like this when I first started. I had a lot of questions about what a corporation even is, how to open it, and whether or not it's beneficial. So I hope this answered some of your questions. If you still have more questions, let me know in the comment section down below. I have gotten a lot of questions about FTMO and taxes, so I'm happy to make another video in the future to try and answer more of your questions. But that is it for today. If you guys made it this far, you have my gratitude. And as always, I will see you in the next video. Peace.